Hey Bowtie Nation, Joseph Hogue here with the Let's Talk Money channel and a quick update on what's become a huge part of the market lately. Nation, one of the biggest themes lately has been the rise of the retail investors. The Main Street investors buying stocks on Robinhood and other free stock platforms. And what's really amazing here is for the first time in my 20 years working in the market, really the first time ever, regular investors are in charge, driving stock prices. Now you can argue whether that's good or bad, that herd investing in stocks that's driving that 45% surge in the stock market since mid-March. But what is undeniable is this new level of control and the information for retail investors. So what I want to do today is look at those most popular Robinhood stocks, how you can use this information available to follow the money and benefit from this trend. Now the Robinhood app started this year with 10 million users, which isn't too shabby for a stock market platform, but it's really been during the lockdown that this free investing app has exploded in popularity. It's added more than 3 million investors just in the first 5 months, making it one of the largest sites available. Larger than 12.7 million people on Schwab, close to 3 times as many as the 5.5 million users, investors on E-Trade. And while it's always more fun to lead than follow, there is a lot of power in following these most popular stocks on Robinhood to benefit from that flow, that money flow into these shares. We're going to be looking at charts with those 5 popular stocks, and you'll see a direct relationship to the share price and this investor interest. Now, the risk here is that you have got to be fast. A lot of these stocks are going to be good, strong, long-term investments, but there's also ones that are just getting a quick boost from investors. And what you need to decide is whether you're in each of these stocks for that quick win or the long-term return. Now let's get to those 5 stocks, but I gotta give a shout out to all you in the Bowtie Nation. I know I say that every single video, but you motivate me and I do appreciate you spending a part of your day to be here and just to help make the community better. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Now we'll be looking at Robinhood stocks, and I love the information we're able to get from this platform, but that doesn't necessarily mean you have to use Robinhood to invest. In fact, you don't have to use just one platform to invest either. I have accounts on 7 different investing sites. Some for free research, some for just trading, and some for the free stocks that you get just for signing up. So I have a Robinhood account and have collected over $600 in free stocks. But I gotta say, for trading, I like the features on Webull better. I get all the charting and the news I need, can use this stock simulator to test my strategies and the stock picks before investing any of my own money. Now I'll leave a link to both platforms in the video description below. Click through and both are going to give you a free share of stock just for getting started. In fact, you'll get 2 free shares on Webull when you deposit your first 100 to invest. Now Robinhood shows the most popular stocks on the platform, those companies with the most investor accounts invested in the shares. But I don't want to just look at this list, because if we're talking about that idea of trend investing, then we don't want just popular. We want the most popular stocks that are getting more popular as they go. We want to be investing in the stocks with rising interest, those with more money flowing into the shares that are just going to continue to drive those prices higher. So let's count down to the 5 most popular Robinhood stocks with increasing investor interest. First on our list, shares of Microsoft, ticker MSFT, with over 523,875 Robinhood investors holding those shares. And this is the 7th most widely held stock on the platform, and just added 27,000 more investors last week. Now, Microsoft is one of my favorite long-term stocks to buy. If we look at the chart again, that green line is going to be the number of accounts holding those shares, and that's just a consistent and stable increase over time. And the company has some great long-term fundamentals and just continues to attract more investor money. And Microsoft got a huge boost from the Pentagon's $10 billion cloud computing contract. The company's Azure cloud platform has already been a big growth driver, but this contract is absolutely huge. It's not so much the size of the contract either, but the fact that this is probably going to open up a wave of other federal and state cloud contracts for the company. None of this is already priced into the shares yet. Microsoft's cloud business also landed a $1.8 billion contract from the Department of Defense last year and a $2 billion contract from AT&T, with CEO Nadella saying he sees a line of sight on many more of these deals. Analysts have price targets ranging from $190 on the low end to $260 per share on the high end over the next year. It's a stable dividend payer and can be a solid addition to your portfolio. Apple, ticker AAPL, has seen strong rising investor interest, adding almost 30,000 accounts last week to over 500,000 Robinhood investors. Now, I've actually been fairly surprised at Apple's stock run, considering the rollout of its product cycle and the pandemic. Apple really hasn't rolled out much in terms of new phones over the last year or two, something that typically drives the stock price, and it's had to shut down stores throughout this COVID outbreak. The company did report recently that it's switching from Intel to its own custom processor chips, which could produce a lot of advantages in that own in-house hardware and software. And that could further protect material supply and then keep more of the company's sales as profits. Apple is also slated to release its new 5G phone later this year, and that could be a big push, just the push it needs to drive those shares higher. Analyst price targets range from $250 each to $425 per share, so not a ton of upside on this one, though I think analysts will be increasing their targets soon. It's not a cheap stock, but definitely one that can keep rising with more of that investor interest. Amazon, ticker AMZN, is only the 14th most popular Robinhood stock with about 345,000 investor accounts, but added a strong 40,018 accounts last week, so rising interest in this one. What can I say about Amazon? It lost that cloud project to Microsoft, but that's not going to keep Jeff Bezos from owning the world someday. Amazon reported revenue growth of 27% in the first quarter and is likely to blow away those estimates for the second quarter as well. This is all as the rest of retail is either filing bankruptcy or just reporting double-digit declines. And not only did the coronavirus accelerate that trend to online shopping, of which Amazon controls 49% of that in the US, $500 billion market. Not only that, but the company is constantly exploring other businesses like cloud and advertising. Amazon is another with pretty modest analyst targets, ranging from just $1,987 per share up to $3,550 each over the next year. Look, pretty much everything in tech is going to be expensive right now, but with that shift to online shopping that is already happening but then accelerated in the lockdowns, that's not going away, and Amazon is going to be a good long-term investment. Shares of Tesla, ticker TSLA, continue to be hot with almost 68,000 Robinhood investors adding to shares in their account last week. Now that makes it the 11th most popular overall and the second most popular Robinhood stock last week for rising interest. And if you think Apple and Amazon are expensive, shares of Tesla trade for a mind-blowing 260 times earnings. And now as a value investor, that's pretty hard to justify, but there's just no denying this momentum in this stock, and it's clearly leading the way in that electric vehicles trend. Tesla did report some blowout numbers last quarter, and it opened its China factory at exactly the right time. The company delivered 90,000 cars in the second quarter, which was still 5% fewer than the same period last year, but still easily beat analyst expectations. And considering that was in one of the worst quarters in history for car makers, it was a huge surprise for the shares. Now that said, at about $1,550 per share, I think you can put this one on your stocks to watch list and just wait for a better price. But for you momentum investors out there, there can still be a few bucks made on this surging stock price. All 26 analysts here have price targets below the current share price, though I imagine a few of these are going to be upgrading in the coming weeks. Targets range from $1,500 a share on the high end to just $295 per share, which even the bears have got to admit, that's tough to see the stock going down that far. And the most popular Robinhood stock, shares of NIO, ticker NIO, broke into that 200,000 club with more than 89,000 investor accounts adding the stock last week. Part of NIO's rise is that enthusiasm for electric vehicle stocks, and part is on the company's improving fundamentals. As a Chinese stock, it's really interesting though to see the momentum given that general sentiment against the Chinese companies, but this one is definitely a stock to watch. Our shares did suffer last year and the beginning of 2020 over concerns about the company's cash position, but NIO did sign recently a $1.5 billion credit facility that means all its cash needs for the foreseeable future are going to be taken care of. And that combined with a strong beat on second quarter deliveries, and this one is up over 300% this year. Now, this is still a really small company, though, delivering just 40,000 cars a year. But as a domestic China company, we know that the government gives preferences and advantages to those local companies. So this one could get a huge boost in that largest market in the world. Now, analysts have not caught up with the stock price here, with targets ranging from just $2.50 a share on the low end to $7.30 per share, which is still more than 50% below the current price. It's another expensive tech name, but you can't deny the momentum in this stock or the potential for the business. Click on the video to the right for the 3 penny stocks I'm buying right now. 3 stocks with double and triple digit return potential. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.